expanding. So we'll move on to the next slide. Next slide, please. Yeah, so as you know, with the current, what the chairman sir just mentioned, with the current ongoing expansion program at Dhule, the company is said to be the second largest maize-based specialty products. And post this expansion, we, with the combined capacity at the company level, will be touching 2,100 tons per day. So this would be a landmark moment for the company in terms of the capacity. So we move on to the next slide, please. So the company is running two facilities. One is at Kutch, the other one is at Dhule. And so Dhule existing capacity 750 tons per day, and we are adding another 1,000 tons per day at Dhule. So the company continues to maintain a robust relationship with farmers, whereby almost for total 30% of the entire procurement for the Dhule plant is coming and being sourced directly from the farmer ecosystem. So we move on to the next slide. So these are the current financials which are for the financial year FY25, which are already published. So we move on to the next slide, please. So as you know, the company post the IPO proceeds and the repayment of debt, we are almost, we are on a net cash positive position. So we'll move on to the next slide. The company remains robust in terms of exports. Almost 36% of the revenue in the last financial year came in from exports across the 58 different countries that the company is catering to. And we are, as a company, as a prudent policy from the company, we are looking for new geographies continuously to increase the export market share. We move on to the next slide, please. We are working with one of the most reputed customers that lies in the among the multinational as well as the FMCG customer spaces. 136 customers is the new customer addition that your company has done in FY 2025. And with the new products that will be launched with the new capacities, we anticipate additional customer addition in the upcoming years. So we'll move on to the next slide, please. So Dhule and Kutch. So this slide is again summarizing the capabilities that your company has, both in terms of the capacities, the land that is there with the company. 210 acres of land that the company possesses at Dhule. In addition to that, 64 acres of land at Kutch. And other renewable energy capacities and capabilities that the company possesses, along with the stringent certifications that the company is carrying. So we'll go on to the next slide, please. So with the ongoing expansion at Dhule, we are anticipating another 1,000 tons capacity addition, which will push the company capacity to 1,750 tons per day. So this post expansion, post this capacity will be, we are anticipating by Q4 this to be streamlined in the current financial year and to be commissioned. So we go on to the next slide, please. So this is the entire product, portfolio of the value chain of the maize-based specialty products. So the company is into the manufacturing of starches, glucose, maltodextrins, as well as dextrose monohydrate, and the company will be also commissioning dextrose anhydrous at the Dhule plant as part of the ongoing expansion program. So we'll go on to the next slide, please. So this slide is talking again about the applications of the product. So the primary applications that the company still caters to is the food industry, along with personal care, pharmaceuticals, and various other industrial applications such as paper and textiles. So we'll go on to the next slide, please. Next slide, please. So we've already touched base on the various applications that the company is catering to. So it's a broad range of applications that we cater to as a company. Next slide. So this slide is how we anticipate the global starch industry as well as the Indian starch industry to progress over the next 5 years. Globally, because of the new emerging application, we are anticipating a 5.5% CAGR for the next 5 years at a global level, and Indian starch industry is also anticipated to progress at a fairly decent rate. So we'll move on to next slide, please. So the company is anticipating revenue growth with once the new commissioning incremental capacity is commissioned by the company, and because post expansion, post the commissioning of the 1,000 tons per day capacity, there is going to be certain increase in the share of derivatives. So we anticipate a certain margin expansion as well. Also, the company has repaid, as part of the IPO proceed, whatever debt. So we maintain a very prudent balance sheet position as on date, as well as the company makes point to be working on a very efficient working cycle management. So we'll go on to the next slide. This is on the current board of Sanstar. We'll move on to the next slide, please. And we'll wrap it up with the last year FY25 financial numbers summarized here. Thank you very much, everybody.
Thank you so much, sir. Now I would like to take a moment.
Following our successful listing on the stock exchanges, it is both a matter of great pride and deep sense of responsibility to address you today. This marks an important milestone of our company for transition to a publicly listed company. I am pleased to share that our company has been successfully launched its initial IPO and got listed in both the stock exchanges, that is Bombay Stock Exchange and National Stock Exchange, on July 26, 2024. This was a historic moment in our journey, making a new chapter of growth, transparency, and accountability. I am excited to share the progress we have made over the past year. As we review financial year 2025, we are pleased to report a strong foundation despite facing a dynamic market environment. Our revenue from operations was 9,534 million. Gross profit for the year was 2,443 million, with a gross profit margin of 25.6%. Our EBITDA was 560 million with a margin of 5.9%, and PAT was 438 million with a PAT margin of 4.6%. Exports contributed 36% of total revenue, highlighting the strength of our international presence. The results reflect our ability to maintain profitability while actively managing evolving market conditions. During financial year 2025, we continued to focus on enhancing operational efficiency. We initiated annual maintenance program at Dhule and Kutch facilities to ensure that both plants operate at their full potential. With these measures in place, we anticipated smooth operations across both the plants in coming quarters, supporting our growth ambitions. We have also continued to optimize production process and cost structures to strengthen performance, ensuring that our facilities are well prepared to leverage future opportunities in the market. Market environment. The agricultural landscape in India has shown a positive trend, with maize cultivation gaining momentum alongside with kharif crop. Government data indicates that area under maize has increased 11.7%, reflecting a strong farmer confidence support by timely monsoon rain. This expansion is complemented by a steady rise in maize cultivation and continued focus on staple crop, signaling a healthy raw material supply of maize-based industry. On the export front, India is pursuing strategic measures to diversify markets and enhance competitiveness, with initiative targeting 50 countries across the Middle East and Africa. Despite global economic uncertainty, these efforts, along with supporting domestic production trends, provide a favorable environment for growth in maize-based specialty products in industry and position Sanstar to capitalize both on domestic and international demand. Expansion and future growth. Furthermore, financial year 2025 was a year of meaningful expansion in our customer base and international reach. We added 136 new customers during the year, bringing a total customer base of 538 as of March 31st, 2025. Our products now reach 35 countries, reflecting growing global demand for our maize-based specialty solutions. Our Guled facility expansion remains an important milestone for Sanstar. The expansion is nearing completion, increasing the capacity from 750 tons per day to 1,750 tons per day. Once fully operational, this will position Sanstar as the second largest producer of maize-based products in India and strengthen our ability to meet both domestic and international demand. Looking forward, our strategic priorities include continuing to optimize cost and enhance efficiency, expanding our global footprint and attracting new clients, and ensuring our offerings meet evolving industry requirements and maintain competitive advantage. Looking ahead of the financial year 2025-26, we remain cautiously optimistic. While we are aware of the uncertainties in the global economy, we believe that Sanstar Limited is well positioned to navigate them. With a strong fundamental, disciplined financial management, innovation-driven culture, and dedicated team, we are confident of continuing our path with value creation. As we look to the future, our approach is centered on building a platform for sustainable and scalable growth. We are enhancing our production capacities to meet the rising demand, while at the same time improving operational efficiency through process improvement and automation. In conclusion, I wish to extend my sincere gratitude to our shareholders, employees, customers, suppliers for their continued support. Your trust and commitment are central to our growth journey. Together, we will continue to build business that creates value for our stakeholders. Thank you for your attention. I look forward to continuing the journey towards a stronger and more prosperous future. Thank you.
Thank you, Chairman Sir. Now I'm reading a agenda of annual general meeting of the company. Ordinary business. First, to receive, consider and adopt the audited standalone financial
comes. Regarding the GST, I think it's a great step by Government of India to reduce the GST from 18% to 5% for all the really push in and bring in more consumption demand coming in, and the benefit will definitely be passed on to the common people or to the industry overall put together. Regarding the domestic share and the international share, we are currently at 33% of the international share of the total production. We export 33% of about to 40% of the produce. Currently, with the ingoing tariff situation and also the slack of these products in the international market, but however, going forward, we feel that this ratio is going to be maintained. We are coming up with new products in the additional capacity in the form of dextrose monohydrate and dextrose anhydrous, which will primarily be used as injectable, which is anhydrous dextrose. And the margins, we feel that because of these products will definitely improve. We are putting up a solar plant in the Kutch factory, due to which the cost of electricity is going to go down. We are putting a captive power plant at our Shirpur plant. Again, the cost of power and fuel is going to go down, and we see an enhancement in the margins going forward on account of these expenditures we will be making or we've made. On the we are planning the plant will be commissioned by the end of this current year, which is before December 31st. However, we are trying our best efforts to start the plant before that. We see an additional revenues of close to 1,000 crores coming in with the enhancement of this capacity. Now, there has been some glut in the demand, but primarily due to the external factors. And we believe that things will normalize starting from next 2 quarters, and we will see the same run rate or even a better run rate as what we've seen in the last year per se.
GM corn we cannot.
Yes. So regarding the GM corn, it is not possible. It is a policy level decision. India cannot import GM corn currently into India, and as and when that opens, I think the doors will open for the importation. The import of corn primarily depends on the supply demand which is there in the Indian market. Now, one of our shareholders did ask that we imported 130 crores worth of corn. At that point in time, it was lucrative to buy corn from the outside India. As of today, I think the prices will or have rationalized, and with the season begin in October, November, we see further rationalizing of the corn pricing to be there. There has been an ethanol demand which is driving the demand of the corn. But if you see the other countries which are doing ethanol, it is neither ethanol or corn. It has always been ethanol and corn-based derivatives. So I think there is just an adjustment which needs to be there. With the corn situation looking fantastically well this year, I think we are doing at least 10 to 15% year-on-year basis increase in the acreage and the yields of corn. And I think the prices of corn shall rationalize going from here forth.
It's not to give rights to pressure.
Yes, and also I think there has been no cap. The cap on the government, the cap by the government on the sugar producers, which was there to produce ethanol, has been removed. So a lot of diversion of corn will also not take place henceforth in the sugar industry, especially for the ethanol markets. Regarding the statutory auditors, I mean, they've been in the industry for decades. They're one of the best. They are ranked amongst top 20 in the country, and I think they've done a fantastic job in terms of being an independent statutory auditor to us. And it is by the tenure is for 5 years, and post that the auditor is changed. So primarily the revenue shortfall and profitability has been again due to the external factors and the and this is not only for Sanstar. I think if you see across industry, this has been the trend for last 2 quarters, and Sanstar is not a standalone or an outlier in terms of the revenues going down and the profitability being shrunk. But however, I feel, after post 1 quarter, we will see as the maize prices would rationalize and demand to pick up, things should normalize henceforth.
13% existing after expansion will be 30% derivative. So the last which are also confused on the 13 and 38.
Post expansion.
So post expansion, the derivative size contribution will be approximately 30 to 30%. In the derivative segment, we are bringing in modified starches for paper and food grade industry. We are bringing in sweeteners primarily for the food and pharma industry. We are striving to bring in new products, and hopefully we should be able to get in post this expansion is done. Thank you. I've tried to answer most of the questions to the best of my knowledge, and in case I missed out something or if there is any other question, please feel free to send us a mail, and we'll try to respond appropriately to the questions being asked.